Hello everyone. This is the pre-market report video for today, 5th December 2024 for the Indian stock market in terms of Nifty and McNifty. First, quickly let's see what happened yesterday. In short, banks, mainly HDFC Bank, supported the market. On the other hand, Reliance, FMCG and auto stocks dragged it down. In the last two pre-market video, we have been discussing this thing. On coming Friday, RBI is going to cut something. It may be interest rate cut or CRR, cash reserve ratio, or SLR. Now yesterday Rochester.com pointed out the same thing but more pinpointed it to cash reserve ratio, that most analysts at present expecting a cash reserve ratio cut to 4% from the present level 4.5%. which in turn made the banking stocks very positive, and thus in the last 2 days Bank Nifty increased above 1150 points. On the other hand, Reliance just had some profit booking, and regarding FMCG negativity, we already discussed in the last video potential GST increase. So the important takeaway here is, to some extent, Indian market already factored the cash reserve ratio cut to 4% from the present 4.5%. By chance, if RBI didn't perform the cash reserve ratio cut on coming Friday means, then most probably it will create selling pressure on the Bank Nifty. In addition, at present, looks like market already prepared for no interest rate cut. So here, if RBI performs the interest rate cut on this coming Friday means, then I guess it will generate fresh buying. Hence, please remember to keep tab on Friday's RBI MPC meeting outcome. Moving on, at 10:30 AM yesterday, rating agency S&P released the India service payment data, which expanded 58.4 for the November month. Though it was marginally less compared to the initial estimate, still 58.4 means service sector expanded strongly. So this also added some level of positivity in the Indian market yesterday. About institution activities, in the cash market, still the trade volume is at the elevated level than that of the regular average volume. And for second consecutive session, FIA was net buyers. The net bought for around 1800 crore rupees, whereas DAI net sold for 900 crore rupees. Regarding open interest volume analysis, in the index future market, finally FIA started to change their stance as they increased their long position by 7% and decreased the short position by 2.5%. However, still on the top line, they are holding 62% on the short side. So FIA will make money only if those index future expires negative. Even on the option side also, FIA wants the market down, but they reduced their bearishness compared to Tuesday. Anyway, for the complete derivative analysis, I added in the YouTube community page. Please have a look. So that's it about the Indian market. Now moving to US. Last night before their market opening, private payroll company ADP released the non-farm payroll data report. Here please note it's private, not the government. The government official one due to release tomorrow. But now, as per their report, in November month, the number of new private payrolls grew by 1,46,000 jobs. This was less than the October month 1,84,000 job addition and also less than the economist prediction value. This weaker job growth made the Fed interest rate cut probability tool to increase the chance of interest rate cut on the December month to near 80% from earlier 75%. In addition, in an interview, Fed chairman also didn't give any signal that December month interest rate cut is at risk, kind of. So US market considered all this as good, and S&P 500 and Nasdaq scaled the new all-time high value for the third day in a row. In the end, Dow Jones increased by 0.69%, S&P 500 up by 0.61%, and Nasdaq outperformed both and increased 1.13%. However, VIX increased by 1% and moved it near 13.5. Then about oil, today there is an OPEC Plus meeting about the voluntary oil production cut. Hence last night oil had some profit booking. So Brent crude dropped to $72.5 per barrel and WTI crude dropped near $69 per barrel. Then regarding Indian ADR, because of the Nasdaq rally, both the IT stock increased despite closing flat in the Indian market yesterday. So if we calculate the arbitrage, both Wipro and Infosys indicating near 1% positive difference. However, on the other hand, ICICI Bank closed negative and HDFC Bank increased just in line with the Indian market, no fresh buying. So both the banks indicating 0.5% negative. Reliance GDR having a positive arbitrage of 0.5%. So for now, IT and Reliance indicating a positive move, whereas banking stocks might have some consolidation. About GIFT Nifty, today early morning it closed at 24,515. As per yesterday Indian market close, it's indicating flat to negative 50 points opening. So as a summary, US market closed super positive, and also in line with that, IT stocks expects to trade positive. However, for the moment, there is no indication of positive opening in GIFT Nifty. Here, please remember, today is weekly Nifty expiry day, and in the last 1 week time, market rallied, especially in the last 3-4 trading session. In addition, in both index future market and index option market, FI wants the market down, and tomorrow RBI interest rate decision outcome. So some investors don't want to carry their position tonight. So all these I expect might create some profit booking, most possibly in the afternoon. So whoever doing day trading, please be cautious. Disclaimer, I can be wrong, it's just my opinion. Please don't make trade based on this. About the things to look out, not much that I'm aware for during our market time. However, in the aftermarket hours at 3:30 p.m., OPEC Plus meeting and Europe's retail sales data should release. And in the night for US, weekly job insurance data, US trade data and Fed balance sheet are some of the items we need to keep an eye out today. Coming to technical, Nifty opened 30 points gap up, and for most part of the session it was above 24,400 level. However, there were a couple of instances where Nifty had a drop like over 100 points in just 15 minutes, and finally it closed positive for the 4th consecutive session, but near flat line, just positive 10 points. Thus, on the daily chart, Nifty formed a doji-like candlestick pattern with third continuous higher high and higher low formation. On the positive side, at present it trades above all key moving averages, above the downward trend sloping line, and trading in the upper Bollinger Band, all indicating good. However, this doji candle showing the selling pressure at 24,500 level, and at the same time slightly long lower shadow indicating that buyers were coming back at 24,400 mark, which means it's an indecisiveness among buyers and sellers after the recent sharp uptrend. Hence, until breaking out on above the upper Bollinger Band around 24,700, we can expect a range bound movement. A decisive move above 24,700 could trigger a continuation of its upward momentum. On the downside, support is at 24,300. A fall below 24,350 could weaken the market sentiment. Then, in case of Bank Nifty, it opened 80 points gap up, and despite some sharp selling pressure like Nifty, it surpassed the 53,000 mark and also closed above for the first time since October. Thus, on the daily chart, Bank Nifty formed a bullish candlestick pattern with a minor upper and lower shadow with second consecutive higher high higher low formation. In addition, it also sustained well above all key moving averages as well as above the upward sloping resistance trend line and traded near the upper end of the Bollinger Band. So now Bank Nifty needs to hold above 53,000 zone for an up move towards 53,750 and then 54,000. On the downside, support is at 53,000 and 52,750 level. Regarding the weekly options data, the maximum call option open was at 25,000 strike, followed by 24,800 and 24,500, with maximum new call option writing at 24,750 strike and then 25,000 and 24,500. On the put side, the maximum open was at 23,500 strike, followed by 24,000 and 23,800, with maximum new put option writing at 23,800 strike and then 23,900. Thus, from options data, 24,500 is the immediate resistance, followed by 24,700 and 24,800 zone, with 24,000 being the crucial support. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.